tell us what all of this means and how the equities markets overall space has been performing. I'm joined in Cape Town now by Graham Bow. He's a strategist at Old Mutual Equities. Graham, always a pleasure to speak to you. Maybe if we take a look at the equity market correction, which was more evident yesterday, again setting some nervousness across the board for investors. But what have been the driving forces behind this?
Well, Gugu, as we've been saying for the last couple of months, in October there was a big sell-off. It was one of the biggest drops we've seen since the global financial crisis, and then that was followed in November by one of the biggest rebounds we've had since the global financial crisis. So the market then started looking rather overbought, and so we had a correction. It was difficult to say there was any really good fundamental reason for this correction. So yesterday, Chinese market pulled back very sharply late in the day, and that was driven by a change in collateral requirements for the bond market in China, which is hardly an earth-shaking event. And then also we had the announcement about the Greek presidential election, which rekindled worries about Greece and its debt arrangements with the Troika and so on. And these were used as pretext for arguing that the market was going to fall. But in fact, I think it's really profit-taking that we're seeing as a result of the very strong rise we saw during November. And as you probably covered already this week, the economics data from the US has actually been very good. The payrolls number on Friday was way above expectations. And not only that, but the wage increases actually slowed a bit. So you've got a situation for the Fed where employment's picking up very nicely, thank you, but there isn't wage pressure coming through, and the long-term unemployment rate is still very high. So there's no real reason for the Fed to respond to that data. We also saw German manufacturing orders picking up sharply on Friday. So the underlying tone, I think, is still very positive for equities, but we got into a bit of an overbought situation and the market found reason to sell off.
That almost sounds true for the local market as well. The JSE Aussie, I guess those levels of about 52,000 plus are a distant memory now, because we also saw quite a significant pullback in recent trading sessions.
So South Africa's got its own particular issues, as you know, and the biggest one at the moment is load shedding and Eskom. And it's not just the load shedding that's taking place, it's that, and I'm sure you've experienced it yourself, is nobody really knows when the lights are going to go off. So you get your schedule, you prepare yourself, and it might happen or it might not happen. And it's the lack of knowing and the fact that it's happening together are adding up to quite a significant problem for the economy, because it makes it very difficult for business to function, whether you're producing something or selling something, whatever you're doing. It's hard to plan, and you can get taken unawares by something that, by lights going off, which is absolutely critical to your business. So this is a big problem, and we can only hope that, Eskom stabilizes and gets on top of the situation pretty soon. Because we've actually seen a lot of very positive data coming out. This week we've had mining and manufacturing data, which if you annualize the numbers, so say take 3-month annualized growth for both mining and manufacturing, it's been double-digit recoveries there after very weak numbers earlier in the year. We also saw the tourist numbers coming through and the hotel occupancy numbers this week, excellent numbers coming through. And then today we saw inflation coming off another notch, 5.8%, and heading for probably much lower territory over the next 4 or 5 months, possibly even breaching 5% and having a 4 handle. This is all very positive for South Africa. So one would hope that these positive numbers are allowed to exercise their influence over the market, and that would help to South African equities to respond to any recovery in worldwide equities.
It's interesting you've touched on gold as one particular commodity, but what about the other commodities that we've seen coming under significant pressure in 2014? The likes of gold, platinum and palladium. Is the weakness still being sustained there?
Yeah. Well, no, we've had a very sharp bounce in gold, platinum and palladium actually in the past few weeks. And so the oil price has been falling and has continued to come down, and as you mentioned today is another notch down as well. But our export commodities have just very recently started to pick up, and that's been pretty positive for our terms of trade. And if you go back through history, if you go back through the last decade, for instance, before the global financial crisis, when we had this positive terms of trade effect where our export prices were rising more than our import prices, or in this case falling less than our import prices, that positive terms of trade effect actually does have a beneficial effect on consumers and consumption spending in the economy. So it's early days, it's only just started to turn the corner, but the decline in the terms of trade that's been going on for a year and a half now appears to be basing out and bottoming out, and possibly will even turn up, and that'll also help us going into next year to get a better economic growth for consumers and the overall economy.
Graham, just to close off with, I know you don't have a glass or crystal ball with you to look into the future, but just from your perspective, what do you believe will be the dominant themes of the first half of 2015?
It's a big question, but well, for South Africa, I think a critical theme is the fact that with oil price coming down, we're going to have significantly lower inflation for some time, and that means that the central bank doesn't have to get too hawkish. And we've already seen the SARB this month not hiking rates and delaying rate hike. It's quite possible that they won't have a rate hike until the middle or even the second half of next year now, because of that low inflationary pressure. And that is a potential game changer for South African consumer and for the South African market, because it just takes some of the pressure off the consumer, who've had a very hard time over the past couple of years. And so I think the global outlook is what is going to happen to interest rates, and at the moment it looks like interest rate pressures are really just getting pushed out into the future, and that's potentially very supportive for equities.
Graham, thank you so much for sharing your insights with us today. That was Graham Bell, who's a strategist at Old Mutual Equities.